Welcome to the Dragons Den. This part of the day is an exciting and dynamic event where we get to hear 4 pitches from businesses and projects that are looking to scale up their activities and initiatives and make a meaningful impact on landscapes. All of these pitches are real business opportunities, and our pitchers are looking for genuine investment, just so you know. And they will be pitching today to our panel of experienced investors. And our investors will critique and question the pitches and assess their readiness and attractiveness for investment. So it is my pleasure to introduce you to our dragons. We have David Plattner, the Chief Visionary Officer and founder of M2E. We have, yes. We have Catherine Goodchalk, the Vice President of Calvert Impact Global. And Sylvia Wisniewski, Managing Director of Finance in Motion. So these are our esteemed dragons, and without further ado, allow me to introduce Shauna Matkovich from the International Woodland Company.
Thank you. Good afternoon, everyone. Yes, it's okay. Yes, my name is Shauna Matkovich, and I'm the Sustainability Manager for the International Woodland Company. And I'm excited to be here today to introduce you to the IWC Tree Climate Fund. Due to its increasing populations and current land use practices, Africa is losing 3 million hectares of forests a year. And this is worsening the effects of climate change, challenging the sustainable provision of numerous natural resources. Let's focus on wood supply, where you can see on the figure here in red, the supply deficit in industrial roundwood for Africa. There are currently 10,000 hectares of new forest establishment in sub-Saharan Africa each year. But in order to meet the demand growth, what is needed is 30 times this amount. But let's look at this from a glasses half full perspective, where new forest establishment is actually a very good investment proposition. We have increasing wood demand, where we have current consumption at 100 million cubic meters per year, growing at 5 to 7% annually. We also have plenty of available, low-cost land with excellent growing conditions. And plantation forestry is not a new concept in sub-Saharan Africa. We have strong forestry traditions, allowing for infrastructure and lots of experience. And pipeline opportunities are deep. So we have opportunity for low-cost, high-yielding plantations to be developed. Yet despite the attractive market fundamentals, capital at scale remains scarce. This is largely due to the risks, which we've been talking about today, and the costs associated with new forest establishment. Our answer to this is the IWC Tree Climate Fund, a $150 million 15-year fund which will invest into early forest value chain projects across sub-Saharan Africa. Through investing across countries and species, investors will gain access to these rapidly growing markets. We will reduce costs and bolster impact through a blended finance structure which combines commercial capital together with a payment for CO2 that is sequestered by the project and a separate forest landscape restoration facility which will finance other land uses within the model. The fund management team will draw from over 10 years' experience in sub-Saharan Africa, where we have managed timberland investments on behalf of institutional investors, where we understand the risks of working in these markets. We have developed this model specifically to address those risks. So in addition to working with a proven manager, how does ITCF1 differentiate itself from other funds? Well, with a mandate to invest over 50% in new forest establishment, no other fund has such a profound impact on both climate change mitigation and long-term wood supply. Our blended finance proposition is a first-of-its-kind structure that will generate market rate returns alongside significant impact. And in the same light, combining a forest landscape restoration approach into a commercial investment opportunity turns risk mitigation into impact generation, allowing for meaningful contribution to the UN Sustainable Development Goals. And building a foundation of cross-sectoral partnerships between investors, sponsors, governments, local stakeholders, and industry interests creates a win-win proposition. So what does our forest landscape model look like? Well, we see it as a blend of course, commercial plantation forestry in with the other land uses within the forest landscape. We would have the commercial investment funding the plantation development, and this would be supported through revenues we would receive from CO2 sequestration. And we would have a separate forest landscape restoration facility to support funding activities with other land uses in the landscape. This would include things like natural forest restoration and smallhold forestry programs. What would result from this is overall risk reduction to the commercial investment and the impact creation in terms of climate change mitigation, adaptation, and sustainable rural development. Let's go back to this model briefly so I can explain to you a bit about the flow of capital and impact generation. So the green box that indicates ITCF1 represents the commercial investment, and that would go in to develop the new forest plantations. As the trees grow, they would sequester CO2 from the atmosphere. Now, we wouldn't be selling the CO2 on the open market, but the idea is to deliver that to the local countries so that they could use this in their emission reductions targets accounting. This would then trigger a payment from carbon pest sponsors that would be recirculated into the plantation itself and running these plantations to help ease the costs associated with this. The FLR facility would be based on a predefined set of activities that are deemed necessary to both reduce risks to the financial investment and also to bolster significant downstream impact. The fund would receive its benefits from the investment upon the sale of the underlying investments. The carbon pests and FLR sponsors would receive third-party validations of both CO2 that's been sequestered and the impact that has been generated. And the project countries and local communities would be the overall beneficiaries of the impacts that are provided, and also, of course, have access to the long-term wood supply. Let's look at how a cash flow model for this would look. So here we have a modeled portfolio of 4 investments based on proprietary and market information. I show here 2 scenarios. So one, the green one, is business as usual without payment for environmental services in terms of the CO2 sequestration. And the blue shows where we have revenues from the CO2 sequestration built in. I'll call that the with pests model. So in the blue with pests model, you can see that we have some cost reduction throughout the investment. We also have a reduction to the financial investment as it becomes cash flow positive already in year 8. And this compared to the without pests scenario, which is not cash flow positive until year 13. The without pest scenario is projected to return an IRR of 9%. And where we include revenues from CO2 sequestration, we project a return of 13% IRR. And we believe this 13% is what is needed to be able to attract private capital to such a strategy. In addition to the attractive financial returns, ITCF1 will also generate significant environmental and social impacts, of which here you can see a sample of what we projected. We will be developing an impact assurance framework that will measure, monitor, and report back the impact that's created to investors and other stakeholders. So briefly looking at the timeline here of our fund, where we have fund development activities that are remaining, shown in blue, and fundraising activities shown in green. We expect a first close of the fund at the end of next year, and a final close by the middle of 2020. So what are we asking you for here today? We would like you to invest in one of 4 ways. The first is a TA facility where we are looking for $300,000 in grant funding to assist IWC in its remaining fund development activities. And with this investment, you would be able to mobilize up to $250 million for new forests in sub-Saharan Africa and related impacts. We are looking for commercial investment of $150 million in equity or perhaps debt to help develop the commercial plantations. From this, we expect 13% IRR. We are looking for PEST sponsors to provide a payment for environmental services in terms of CO2 sequestration. And this would be recirculated again back into the commercial plantation development. This sponsor would have a strong interest in supporting African countries in meeting their emissions reductions targets. And from the Forest Landscape Restoration Facility, we are looking for $20 to $40 million in grant funding to support FLR activities. These sponsors will have a strong interest in green and social development and also a mission to contribute to the UN Sustainable Development Goals. IWC has been servicing sophisticated institutional investors since 1991. We have nearly $5 billion under advice and management in global timberland investments on behalf of our clients around the world. We have developed strong networks and investment and forestry around the world, enabling us to deliver best-in-class services. And we are a majority employee-owned company of 24 international professionals with our headquarters in Copenhagen, Denmark. We have a fund management team ready to go on this strategy with, as I mentioned, over 10 years experience in sub-Saharan Africa, amongst other geographies in the emerging regions. And we will additionally draw from other resources within IWC and expand our presence on the ground upon first close of the fund. As I round off, I'd like to leave you with a few photos from some of our investments across the emerging geographies, where we have demonstrated superior forest establishment and management throughout the value chain. We have a strong focus on ESG principles and establishing collaborative cross-sectoral partnerships. We have demonstrated that we can turn degraded areas into thriving and commercially viable new forests within a landscape of multiple values. As we close, I'd like to remind you that Africa has a challenge. It needs new forests at scale, both for climate change mitigation and for long-term wood supply. ITCF1 is a first-of-its-kind opportunity which allows you to contribute to this solution while also be exposed to the growth markets of this impressive investment proposition. We are ready to turn this strategy into reality, but we need your help. Thank you.
I'll go first. So great job.
Thank you.
Good presentation.
Thank you.
So I liked the good problem statement from the get-go. Conceptually, I really like leveraging kind of existing track record, experience, sector knowledge to the problem. And I like the diversification, sort of both geographically and presumably kind of across asset types. Couple of questions. I don't quite, so what's the term of the fund?
That's 15 years.
Okay. So I'm curious at your positioning of you're looking for 150 million of equity or debt, because I'm trying to figure out what the role of debt might be in a fund like that. And then just talk to me a little bit about where the exit is. Where does that come from? What does it look like?
Yes, thank you. Okay, so when I said equity or debt, we would prefer to have equity, but we understand that some investors prefer to invest in debt. So they might enjoy the proposition, but can't come in as a regular equity investor. We also know that some investors would support kind of a concessional debt. So where they could come in behind the equity investors upon exit and support the equity investors there as kind of your risk mitigation as well.
Okay, I think, so I'm a debt investor. I would check with some of your equity investors how they feel about having debt in the fund, because that's a wholly different.
And can I add to this?
Yeah,
that it might likely be that it's better to bring in the debt later on if needed.
And then I don't know very much debt that can wait 8 years for interest payments.
Sorry?
If it doesn't cash flow for 8 years, it's more of an equity profile, right?
Yes,
so
yes.
Yeah. So, and then my only other question, then I'll turn it over to you guys, is just the carbon PES, sort of, when does your investor know what the price is going to be for that? Kind of when is that set? Is that a certainty? Because that's a big component.
Yes, of course. And that we would set up at the outset. So we would make an agreement with whoever is going to be sponsoring that payment on a set price for the ton of CO2 that has been sequestered. We would need that kind of a guarantee in the system. But, of course, the sponsor of this is also going to need a guarantee that that CO2 is being sequestered. So we would work that into the model and the methodology on how we would calculate that CO2, and also have some safeguards built in so that we could, if there are any losses or things like that, that we could account for that.
Well, following on what Catherine just asked, I mean, looking at this blended finance structure that you're proposing, do you have experience in managing these kind of structures? I mean, these are quite complex, and combining, let's say, commercial investors with donors is not always a sweet marriage. Sorry, are there unsweet marriages? So, I mean, our experience has been that generally donors pose their conditions. You know, they have certain qualifications, they have special rights, they steer your investment strategy eventually. They can be very bureaucratic, special monitoring. So just to understand, you know, what kind of experience you have had in combining these different groups, and how do you want to avoid, or what is your mitigation strategy actually to control the donors in such a way that they're not impinging on commercial investor rights?
Thank you. We do have experience working with different investment capital, sort of like what I explained in this FLR facility, where we have predefined activities that the donor funding is going to address. So
and what is that donor? I mean, just out of curiosity, with what kind of donors have you
like a development bank. Yeah. And yes, we've found that by working with very organized, predefined activities on how that funding is going to be allocated, that's cleared up a lot of issues. Of course, there's a lot of reporting requirements that need to go on, and a lot of management of that issue in particular, but I don't see that as being a prohibitive aspect of working with donor finance. It would, of course, need to be well worked out in the agreement at the beginning. And what was the second part of your question again?
Well, that was on specific, let's say, experience that you've had. I mean, you know, you partly answered that. But this kind of specific structure, have you tested it already somewhere? Or is this a new venture?
This is the first time for this specific model. Yeah.
So I come more from an entrepreneur investor. My colleagues are more from institution, debt, perhaps equity. I come from the basics. So I'd like to go back to some basics that I didn't understand both in your written overview and what you said. Please forgive me if I didn't hear it right. So what do you mean by wood consumption? Who are the buyers? Are you selling the wood? I didn't get that.
So wood consumption are the populations, the local people that are buying wood to build up shops, build electrification poles, this kind of thing.
But there's no international distribution, you're just selling it locally.
The idea is that the local markets could more than fulfill the need. Right now, there's a deficit of wood, and Africa is a net importer of wood for the local market. So
Okay,
the idea is not to export the wood.
And you've established the kind of trees, everything, what
It depends where you are and what the local market is. And maybe you have a pulp mill opportunity in some place where eucalyptus grows really well, or maybe you have a structural lumber opportunity where pine grows really well. So we would look at the different geography, at where the market fundamentals exist, and what the site characteristics are for growing the different trees.
Thank you. But in the meantime, there's no in-place buyer, except that the local that build it and they'll come. Is that what it is?
No, there should be market fundamentals there. There should be some kind of informal market. And I mean, that's the case normally, is that there is an informal market of wood consumption, for lack of a better word.
Right, but I'm just asking, and what's the cost of one tree to plant one tree?
That's a very difficult question.
Well,
It's yes.
I
can come back to you on that.
It goes to the core of the
but-
basics of the whole proposition. How
yes.
much does it cost?
And I can find that number for you. It depends, of course, on the area, and new forest establishment is costly.
We're being asked to stop, but I did have who implements, who owns the land, and basically who buys the carbon. Those were basic entrepreneur questions that I'm addressing.
Yes.
Thank you.
Thanks.
Thank you, Shauna. Thank you, Dragons. Next up, we have Robert Berman, who's going to present an investment opportunity on behalf of Fair Ventures. Welcome, Robert.
Hello, everybody, and welcome to the wonderful world of sustainability. We are Fair Ventures, and I'm going to present to you today an investment case for up to $100 million in our proven approach in sustainable landscape restoration in Indonesia. So our approach is fairly unique, and at scale, it has the potential to make a real difference to tens of thousands of lives of local people and 100,000 of hectares of land. It is a pretty profitable case, and at the same time, it has the potential for a system change for the people in Kalimantan to improve their lives. So what is this all about? We are focusing on sustainable landscape management with reforestation of degraded areas and agriculture between the trees, and conservation of the still existent natural forest. We're going to scale this approach in stages. So what we are looking for are $5 million this year, another $15 million in about 2 years from now, and up to $100 million in the next 10 years to come. For the first $5 million, we are looking for an innovative financing structure, meaning a mix of grant, equity, and potentially a soft loan drawdown structure. So a lot of stuff we have been discussing this morning and during the day. So here's an opportunity to put this into practice. Our project returns a 17% IRR in a base case scenario with a payback period of 10 years. But we do not only deliver on the financials, but also on social and ecological impact. So we have the potential to improve the livelihood of up to 50,000 people and sustainably manage 100,000 hectares in Kalimantan. So before I tell you how we're doing that, I tell you why we're doing that. So basically, there's still a huge urgency to stop land degradation in Kalimantan, and there are different reasons for that. What you see here is natural forest in Kalimantan. just being prepared for another large-scale palm oil plantation. And this is really a huge problem. We see that at a scale of hundreds of thousands of hectares in Kalimantan. And this is really massively pushing back the natural forest. But there are other challenges as well. And one of the key challenges is that there's a lack of sustainable income opportunities for the local population. This means that this will continue if we don't provide alternatives to people. This is slash and burn agriculture, which is officially forbidden these days. I took this picture 4 weeks ago, so this is still happening. And illegal mining that people are making a living from, and both of it is destroying landscapes and leaves them devastated on a large scale. So luckily, we have some answers to this, and I'm going to show you how we're doing this. So this is a typical setup we work in. You see some natural forest in the upper part of the picture and degraded areas underneath. So we are working with communities, reforesting those degraded areas with local fast-growing species, Albasia and others. These are lightwood species, which have a cycle of 7 years until you can harvest. And in between the trees, we're doing agriculture. So this is delivering an early income to farmers and also an early cash flow to the project. In the natural forest, we are cultivating non-timber forest products like rattan and others. And in the core zones of those still intact forests, we only do minimal intensity management like some wild collections. But most importantly, we are also trying to get a profit out of the natural forest. So this is giving an incentive to people to really conserve it. So does this really work? This is an area we work on with farmers. This is May 2016. And this is the same area only 1 year later. So before and after. So this stuff is growing pretty well. Another example, on the lower left hand of the picture, you see the degraded area. And in the big picture, you see the same area just 2 years afterwards. So you have, in this case, the Albasia trees with between 10 and 20 centimeters in diameter already after 2 years only. And quite some biodiversity in between, and even some livestock that the farmer is having here. So this works out pretty nicely. But what do you need to do to really implement that successfully on large scale? So basically, it all starts with trust. People have to know you, and people have to trust you to really work with you. And we basically gained this trust over the last 5 years that we are working on the ground. So we are now ready to bring this to scale. And what is really important here? What we do from the start is we work across the value chain. This means we do not only work upstream in the value chain with our farmers, but we also from the beginning work with the industry. We enter into R&D partnerships for product development. We help some of the SMEs in Indonesia access the German market, and they help us with our processes and help us with implementing best practices. And in this way, we already secure good relationships and secure offtake opportunities for what we produce very early on in the process. So what is important in this value chain? It starts with land tenure, as we heard so often today as well. And we only work on land with very clear tenure. Today, our focus is mainly within the social forestry program of the Indonesian government. So the government provides clean and clear permits to the communities, and we are cooperating with the communities. We run our own tree nurseries, so we have a hand on the quality of the seedling right from the beginning. And we manage all the processes from seedling until harvest in a sustainable manner. So we are producing FSC certified timber, and the cash crops we are producing are also organically certified. We're monitoring all of this in a very rigorous way, and we're using drone-based and web-based technology to do this, so we are also able to bring this to scale. And as I said, we already established partnerships for the downstream part of the value chain. So partnerships are really key to this on many levels, and we have established partnerships on all the relevant levels. We are working with NGOs, mainly for the socialization with farmers and communities. We work on the research level with national and international institutions. We are very well linked to government organizations. And we did already establish quite a number of partnerships, as I said. So let me show you some product examples. On the left-hand side, you see a composite product made from our lightwood. This is done by one of our partners, and this is a product that is actually applied in the yachting and caravan industry. And in the timber area, we do have MOU in place with this company, ABP, which is a timber processor on Java for the sale of the full annual output of the first 4,000 hectares we're going to work on. In the middle, you see the wild peanuts. We're already producing those with an organic certification. And we have an MOU in place with the company PMA, which is a cash crop trader in Indonesia, for the first 50 tons of our production. And on the right-hand side, you see some innovative products of a company called Out for Space. And we do have an MOU in place with Out for Space for the supply of high-quality rattan for their products. So what returns do we create, and how do we go to scale? Financially, we have IRRs between 15% and 20% from all the sources that I just showed you, and some CO2 certificates. Socially, at scale, we're going to impact the sustainable livelihoods of 50,000 people, and we are also going to conserve the natural habitat, which is, for example, not the case if they decide to sell out to palm oil companies. And we will be involved in community development with around 100 communities. On the ecological side, we will reforest around 40,000 hectares and conserve around 60,000 hectares, which, by the way, also has quite a nice CO2 footprint. So how do we scale this? The first cooperation will start this year with 4 communities, which hold 2 social forestry permits. This is 4,000 hectares. We are going to expand to around 15,000 hectares in roughly 2 years from now, with communities that our NGO partner, Borneo Institute, is currently working with, helping them through the processing, through the permitting process. And we're going to go to a scale of around 100,000 hectares within the next 10 years. This is all focused on the social forestry program of Indonesia. There are alternative ways to scaling as well. So, for example, with private concession holders and with forest management units of the local forestry agencies, and we are already in conversations with both of such parties. Very briefly, what have we achieved so far? Over the last 5 years, we provided the proof of concept that this is really working. We worked with more than 1,000 farmers, provided 850,000 seedlings, replanting more than 500 hectares of land. We learned a lot. Behind every dot that you see on this map, there's a farmer and data of what has been done there, so you can look this up on our website. We have been winning a prize for the best social and community impact at the International Solution Search Contest, Farming for Biodiversity, last year. And just 2 weeks ago, we came out finalist and a lighthouse project of the Google Impact Challenge in Germany for our web-based approach to monitoring. So what do we need from you? You're all invited. As I said, this year we need $5 million to start the implementation of those 4,000 hectares at the Tusang area. We are looking for an innovative financing structure. So what we did so far was done with smallholders and on a non-profit basis. We are now moving to a for-profit basis. So we learned a lot over the last 5 years. We know how to do it. We know how to run this. We are very well linked in the communities and with all of our partners, but there's still learnings to be done. So we're looking for this innovative financing structure with some grant and some soft loan money if possible and some equity. So also we've been talking a lot about this morning. Here is an opportunity for all of you to implement this. And there's also an opportunity to deploy much more money in the next 10 years, so up to 100 million. But most importantly, we're looking for like-minded investors that really understand what we're doing here, that really understand that triple bottom line that we're delivering on. And we need you to go this way together. So thank you very much, and I'm happy to take your questions.
Okay, thank you very much. Ambitious. Kalimantan is a tough place. I know it well.
It is, it is.
So which tribe do you, or which community do you work with? What's the name of the tribe, or is it one? Or?
It's the Dayak people. We're mainly working in the Gunung Mas district in central Kalimantan.
Okay, it was deforested before, right?
It was deforested before. It has actually, the pictures that I showed are pretty realistic picture. There's still some natural forest left, but there are huge degraded areas as well.
Was it a community that had already deforested like 100,000, 250,000 hectares?
This is actually a drone map of those 4,000 hectares that I'm talking about. So what you see here is a mixed picture. You see the darker green areas, which are still natural forest, and the lighter green areas that are degraded in different stages.
Well, it's fantastic to work in that region. So just two more questions. The government agency you're working with, Piratani?
Yeah, we're working with the Ministry of Forestry directly, and
Piratani.
Yes.
Okay, and you have contracts with them, right?
We don't have contracts with the Ministry of Forestry directly. How it works is it's the social forestry program of the Indonesian government. So this is pushed very much by President Jokowi. Right. And the Indonesian government is giving out permits to local communities, so they are allowed to officially work on this land. The government is giving out 12.7 million hectares of social forestry permits until 2020. In central Kalimantan only, it's 1.5 million hectares, just to put this into perspective.
I've been one of the receivers of that amount of land. So now just another two questions. Who buys the wood and how much has been invested?
Yeah. The wood is basically bought by our Indonesian partners. They're primarily sitting on Java. You know the situation. The processing industry is mainly on Java, so we do need, after harvest, we do need to transport our timber to Java. With the cash crops, this is being bought by our Indonesian partner as well, but it's free on board Kalimantan.
And basically you have all that infrastructure to ship and do all that, or
the infrastructure is there.
Is that what the 5 million is used for?
Yeah, the 5 million is basically used for two things. Some is capital expenditure that we need in the beginning. So we need to buy some vehicles. We need to set up some roads and paths to really work this land. We need some machinery to clear the land. So this is, and we need to put up some buildings. This is mainly the capex. The rest of the 5 million is actually operational expenditure and to cover the losses until the first tree harvest after year 7.
And one more thing, and that's how many trees do you plant when you take down a tree?
Yeah, we are planting in a 3x3 grid, so that means per hectare we are planting a bit more than 1,000 trees. We lose calculatory around 40% of that, meaning There is some losses in the beginning, trees that don't grow. We account for occasional fires and those kind of things, but there's also a thinning after year 3. So we are taking out quite an amount of trees after year 3 to give the other.
So 5 to 8 year tree growth, right? The fast 5 to 8 year growth?
7-year growth, yes.
All right, thank you. Good.
Thank you.
Well, I have a pretty fundamental question, and that is who we are investing into. I mean, who's the counterparty? I'm not so sure. Is this you as a firm? Is this a special purpose vehicle that's being set up, non-recourse? Or do you create a company? Or is this going into cooperatives? Or I don't know who my counterparty is. And can you profile it? I mean, can you give me, the critical, let's say, financial parameters that an investor is interested in, like, capital base, EBITDA, and so on?
Yeah, thank you very much for that question. So I'm taking the structural one first. We basically have 2 options of, basically 3 options of doing that. So we are going to create a for-profit vehicle for that. Basically, let me put this up. It's somewhere in the backup. Let me see if I find it quickly. Here we go. Okay, we will put up a for-profit vehicle. This is actually in the making as we speak, which will be the holding vehicle you see on the top, which will be either German or Luxembourg based. We pushed this out quite a bit because we're still looking for that first anchor investor to put money into this, and as it comes with my experience, investors are often very fixed to a certain structure. So I didn't want to put the structure in too early. So I don't want to limit the potential investors. So basically, as we speak right now, we did a lot of things already to set this up, but it can still be shaped to the needs of the investor. But this is basically what we would envision, and then there would be, just for tax purposes, a holding vehicle underneath, and then there would be, down at the bottom, there would be a PMA, which is the Indonesian vehicle for international investment on the ground. So there is a holding. On the very top, there's a vehicle for investors underneath. There is an intermediate vehicle that you can have or not have. This is mainly for tax purposes. And there's a local vehicle in Indonesia.
Well, I understand that we don't have time to go into that. I mean, at first sight, it looks pretty complex, and certainly I would, be very interested in understanding how is the capitalization, actually managed. And this looks very much like venture capital we're talking about.
Yes, it does.
And particularly for someone who's coming from the nonprofit side, I would like to really understand who runs this, because it's a capital issue, because we want to see skin in the game from you. Mm-hmm. So, and secondly, it's very critical to see the management team. I understand, I see, but sorry, I mean, sorry. I think that the Dragons should at least be able to pose a question. So I stop here so that Catherine at least gets a chance.
I'll just ask the question and you can answer it to the next audience. I'm curious about just the fundamental business model here, and I'm assuming you're contracting with landowners or those who have the contracts, the long-term
the permit holders, yes,
the permanent holders. So I'm really curious about the economic proposition for them, right? Because the premise is this is
absolutely,
right?
And
so I think that's that's something to work into your pitch, and then I would second the maybe simplify a little bit.
Simplify, okay, got it. Very brief 20-second answer to your question. There are 2 income streams for the communities. One is we're going to pay the people for the work they will be doing in the field. And the second is there will be a net profit sharing with the communities.
Okay. All right.
Thank you.
Thank you, Robert. Sorry for cutting you off. It's very interesting stuff that we're hearing. Next up, we have Hajar Ben Al-Qadi, and she's presenting an investment opportunity on behalf of Mundialis.
Can you hear me? Yeah. Thank you. Good afternoon. Earth Observation-Based Location Identifier, Yoli, a broker platform with 4 main components, with the main goal to bring together investors to invest in land restoration. Since December 2017, it is in its conceptual phase, supported by the European Space Agency. And the fact that we are all together here in the Global Landscape Forum from different backgrounds, it is a great opportunity to have your feedback on its functionalities to tailor-make it. So we are looking for investment of circa 2 million to start the development of the platform from July 2018 until spring 2020, when the platform is planned to be operational. So now I would like to share with you the story of Gerazis, a planting company from the Netherlands and our partner in Yoli project. They invented an ecological water saving technology. They call it Grow Box Plant Cocoon, and they were awarded national icon by the Dutch government. Grow Box Plant Cocoon is an ecological container made from recycled paper, which is collecting water, atmospheric water, enabling more than 90% rate of survival rate while using 90% less water. So Gerazis came to us and they explained their concerns. They would like to plant trees using their Grow Box Plant Cocoon in arid and degraded area. They also explained that the main tree, on the shade of the tree, they can grow vegetables and fruits, which is providing smallholder farmers with food in the meantime, while helping offsetting carbon. So in order that Gerazis can plant their trees in these arid areas, they need, first of all, to identify these degraded and arid areas. Second, they would like to make visible their project to investors and have access to investment. And third, after the implementation of the project, they would like to monitor the tree growth of their plantations. Then, during the implementation of the project, they would like to run workshops on using the Grow Box Plant Cocoon. And then at the end of the project, they would like to communicate about their success story. So we thought food security and carbon offset is one part of the bigger image, which is land restoration, which seems to be a multi-sectoral activity connecting different stakeholders from investors, government, smallholders, service providers, NGOs. And it is an interconnected activity, and it has spin-offs related to food security, SDG number 2, creating sustainable jobs, empowering communities in technology, SDG number 17, or accelerating some mechanisms such as RED+. So to facilitate the implementation of a multi-sectoral interconnected activity, land restoration, we thought that we need 4 components. The first one is identification of these areas of restoration, globally and locally. And there are some, from the international community, some guidance using remote sensing and geodata, such as a land degradation neutrality, a technical guide, or existing platform such as landscape, forest and landscape restoration opportunities, so the Atlas of Forest and Landscape Restoration Opportunities based on the Restoration Opportunities Assessment methodology. Then second, as land restoration is a multi-sectoral activity, we need a marketplace that brings together all these stakeholders to select the project and also the partners to work with to implement a land restoration project. For sure, there are organizations and events that play this role, and stakeholders have their own channels and way to connect with each other to collaborate. Then, after the implementation of the restoration project, we need to monitor. Monitoring is essential. Monitoring of tree growth, of biomass, change detection. And this is assuring traceability on the process and providing or helping reporting on activities. Now, if we would like to have a sustainable and flexible process, we need to share knowledge. Knowledge about elaborating business, the technology used for monitoring, the techniques for planting, financial strategies. And for sure, there are some efforts in this regard from the different massive open online courses or workshops. So we thought about one all-in-one platform, Yoli, a web-based platform with 4 main components: identify, select, monitor, and learn. Intra-connected geographically, allowing traceability and transparency from the identification of the project and to learning lessons from it. Empowered by remote sensing and geodata, and supported by cloud computing capacities. All is flexible and sustainable by open source philosophy. So the user needs to register in the platform, and the first component, identify, and the second component, select, of the platform will be free of charge. But once the investment agreement is concluded between the different stakeholders, the investor will have to provide a percentage on the total investment, and this will be covering the cost of the operational costs of the platform, and including 5 years of monitoring service without fee. So all in all, Yoli platform environmentally is beneficial, as it is catalyzing investment in land restoration. It is financially beneficial as it develops trust between the different stakeholders. It fosters their collaboration and develop and create business opportunities. And finally, socially, it creates and empowers communities. It leverages the knowledge of the communities towards one goal of land restoration and change the mentalities of sharing. So now, at the end, I would like to present to you the team behind Yoli. Happy and friendly team from Mondiales company, a company located in Bonn, Germany. We are a young company founded in 2015, but with a decade-long expertise of our team members. Our business is based on open source value chain, and we are firmly rooted into the international open source community. We are rapidly growing since 2015, and we are more than doubling our turnover every year. Thank you.
I don't understand. It's great. Great. So you're going to be a broker connecting people who want to invest in sort of in replanting in arid areas with landowners who want to do that using this GrowBox product?
Actually, GrowAssess is an example of or case of what could be the usage of this platform. But the platform is for all type of projects that are in the land restoration activity. And the platform will basically connect the different stakeholders, so investors with ministries, with NGOs, with aggregation of smallholders and service providers.
And your revenue comes from a fee on paid by your investees, the recipients of capital?
Yeah. So once the agreement, the platform is free of charge. The first and second one, identification and selection, which is the marketplace, the second one. And then once the investment agreement is concluded between different stakeholders, then a percentage on this total investment will be then provided by the investor, which will be then covering the operational costs of the platform and including 5 years of monitoring service without fee.
And so, you know, my lack of understanding is my own ignorance on this. I think there's a depth here that I don't have in this, particularly in open source platforms. But what's the regulatory regime that this business is going to operate in? I'm thinking in the context of sort of U.S., broker-dealer regulations, sort of how do you all fall in that?
So you mean with open source?
Are you a regulated broker-dealer?
So with open source, you can basically develop further the platform as you wish, and based on your requirements and needs. The only obligation is to not have it proprietary, so it will belong to the open source community, so to everyone.
So if you do that, you're not subject to regulation as a broker-dealer. It's basically, is it like crowdfunding?
Not crowdfunding, but if we speak about open source from the coding point of view, from the programmation of the platform, from the development of the platform. So if you know how to program such functionalities, you are very welcome to program it, and you own it, but it also, the community owns it, so it belongs to everyone.
So I'll stop with my questions. I think you're catering to a very niche provider of capital, right? Who's really interested in sort of seed funding, kind of a fintech solution like this. So I'm going to turn it over to you guys to ask better questions.
I would like to better understand, the market analysis that you did in terms of who's going to, basically use these services. What's the demand for the different components, and get a little bit more clarity on the actual income model. I mean, you say there's a percentage charged on the investment that you're some sort of connecting, though I have the same concern as Catherine. I'm not sure whether from a regulatory perspective you're actually fulfilling a brokerage role or a distribution agent role, which falls under a specific regulatory regime. So you probably want to check out that just to be on the safe side with this. But again, out of curiosity, really understanding the analysis that you did on the market. Who needs this? Who wants this? Who's ready to pay what for this? When will you be cash positive on this? How and when will you repay these 2 million that you hope to raise?
So the platform is for everyone who is implicated in land restoration, so the different stakeholders. We are facilitators. We are service provider, basically remote sensing and geodata. And the platform is geographically based platform, so all information is connected to each other geographically with coordinates. And then analysis are then allowed with this capacity of geographic information, and empowered by satellite imagery analysis and information that we can have. For the profit, we think about paying back 10% from the profit after 1 year of profit to the investor. So from this 2 million. And for the incomes of this platform, so we thought about this percentage that will be 5% on the total investment that will be paid from the investor, after then 5 years, which are included in this 5%, then the monitoring can cost, and this will be covering the operational cost of the platform.
That's, I would say, very high assumption. It's extremely high cost. I have my doubts that this is going to fly. How do you come up with that figure, 5%? I mean, on which basis did you derive these 5% cost assumption or income assumption, better to say?
There was different calculation based on what is on the table provided for land as investment ready for land restoration globally. So we are thinking about a global platform that is encouraging investors to invest in land restoration, but having this transparency and traceability on the whole process. So based on that, we came up with 5%.
And final question, and then over to you, David. Competitors, I mean, you talk about open source. Obviously, there are a number of geospatial software packages available. Open source basically allows everyone to basically participate in programming, so everyone can also, in that sense, take away the product. So where is the proprietary element in this, which is necessary to commercialize, your product in a way? So how do you see the competition element and the proprietary element?
Competition exists, yes. There are, but we see it as complementary. We see it as an opportunity to work together. So some platforms exist already for monitoring in different aspects. REDD+, for example, forest monitoring. There are for identification. There is the Atlas of Forest and Landscape Restoration opportunities. The second question was the competitors and how we. Yeah, so there is no proprietary rights on this, but what we are selling is the service. So everything is open source. We develop it, and it belongs to the open source community. But what we are selling is our service that we are providing.
Thank you. Again, I go back to my basics always. I don't understand the service, so I'm sorry if I didn't get it, but are you doing a blockchain or a utility token?
We're not doing blockchain. We are thinking about it as a matter of scaling up the platform, and for maybe the marketplace and for monitoring part using remote sensing data. We're not doing
so the next question is, probably what would have made it easier for me is to see an example of the software. I mean, I've seen your structure, and it's confusing to my colleagues here, but the software itself is what you're selling, right? So I would have liked to have seen that. And apparently you got some funding from ESA, right?
From ESA, from the European Space Agency. This is actually a project in its conceptual phase, and we are thinking about what could be the functionalities to answer the different requirements of the different stakeholders implicated in land restoration. So we came up with this platform with 4 components. We thought it will address these requirements: identification of land restoration, a marketplace that brings the stakeholders together to select a project of restoration for implementation, and then monitoring this project, and then learning lessons and sharing the knowledge about different techniques and technologies. Now for how the software would look like, we thought about here, I would show you how it would look like. So this is just design of how it will function. So the user will register in the platform basically, and then we'll log in. There will be a form of different information that will be then connected to the registration form. And then the user will then create a project. And this project, from this step on, the information is all geographically then connected. So the project will be created, let's say Growbox, Cocoon project from Gorazes. Then they will have step on to identify component. So the identify component, whether you use the filter with different criteria to select your area of restoration based on these criteria, or you have already, already the area of restoration you would like to work on, so you can upload a geographically identified data, so shapefile, for example, or coordinates of your area of restoration. So then this is linked to the project you created at the beginning. Then the filter will give an answer. If you don't know the coordinate of the area you were working on, you use the filter. Here we have, for example, here was the filter, for example, of looking for very arid areas with land covered desert with an annual mean temperature spread than 25 degrees, etc. So we have here the answer of the filter. We take, for example, the Gorazes will choose Algeria. Then we will step on to the marketplace. In one side, we will have the project entered created by other users, and the other side, the different stakeholders implicated in land restoration. Then there will be some criteria from the different stakeholders to select then the project. So let's say the Ministry of Environment of Algeria saw the project of Goazes and thought this is an interesting project. I would like to get in contact with them. Then the Land Degradation Neutrality Fund manager looked also for the different projects and said, oh, okay, this project, I like it. I would like to get in contact with Goazes. They coordinated and coordinate with each other, and they then choose the project. So let's say the project is implemented, and then the monitoring phase is the monitoring phase. So we have two ways. Whether we have background on remote sensing and geodata analysis, and we can use the algorithms provided on the cloud computing platform, or we just would like to have product-ready products like biomass or change detection, etc. And so we can then choose. And then at the end, after the monitoring, we can organize workshops if we like in different, how we can monitor forests, for example, and can have some graphs or some information about the success indicators of the project. So this is how we imagine the platform, how it would function. And all is geographically linked, so we have all the information.
And this is different than Copernicus or Whirlwind platform, or, I mean, it's...
So Copernicus, for example, is providing satellite imagery. Here we are providing the cloud computing platform is connected to Copernicus, is connected to servers of NASA for Landsat, for instance, for Copernicus for Sentinel data, and for other cloud servers to have the satellites. But then we are processing this data, providing maps, and this is the service, one of the services, is these maps, this analysis.
Aggregating maps is what you're doing, okay.
So I would just, I think we got the end sign. Just one comment and feedback, and I really admire the ambition of this and the complexity of it. I would really hone in on, so I think your business model is selling, access to capital through this platform, or access to, your revenue is dependent upon in projects getting financing. Yeah. Right, through your platform.
Right.
So I would double down on Sylvia's question: is who is your market? What is the demand for this? How do you think this solution is going to really unlock capital that's not flowing right now to that market? And put a little meat behind, this is a price point that's going to fly, right? And that will, I think, it will clarify kind of fundamentally the grounding of your business. And then I think it will be clearer for your audience and better for them to understand, that it could be viable.
Thanks. Thank you.
All right, thank you, Hadja. We have one final pitch for you this evening, and this pitch is by Jules Roberts from GreenFi.
Hi, I'm Jules. Hello, Dragons. I am the CEO and co-founder of GreenFi. We are a fintech company. We provide IT tools and training materials for the eco-credit movement. We started and we have kind of developed our systems with the IUCN and are currently accelerating with the Climate Kick initiative in Ireland. So now, it might be obvious that I was the social media vote when I bring out my bag of tricks. But first of all, without preaching to the choir too much, I'm just going to touch on the problem that GreenFi sets to address. This is quite a messy little brick of charcoal, which you can find piled along mostly every road in East Africa. The reason is simply because it supplies 80% of household energy for people who live there, as well as a pretty nice source of income for a lot of other people. Sadly, though, sadly, over 200,000 trees are cut down every day in Kenya alone, according to the WWF, but less than 10% are actually replanted. My second prop. This jar of soil represents the economic cost of soil loss in Africa, which today is currently $68 billion annually. And as I'm sure everybody here is fully aware, we're running out of farmable soil. And this is going to create some serious challenges for food security in the coming, in the coming decades. And now the big one. This is a rubber octopus. Yes, clearly it is. The one I was bringing out from Kenya, unfortunately, escaped from my bag somewhere over the Atlantic Ocean. So Octavian will have to do for today. Still alive, yeah, in our minds. So this octopus represents the enormously sustainable nature of fisheries. They lay over 200,000 eggs. Well, we don't know really, we can't count, but they're so selfless. They eat their mates, thanks guys, and then die themselves when the babies are born. So this is really admirable, but it's also a stark contrast to what's going on there now, when East African fisheries are only producing 25% of the catch they did in the 1980s. So I think that's pretty poignant. So what these rather silly props mean for us is what they represent are the natural resources that provide the energy and food sources and ecosystem services that we all rely on, but only if they're managed in a sustainable way. And it's the smallholder fishers, forest-adjacent communities, and small-scale farmers who lack the tools and incentives to do this sustainably. And that, specifically, is the challenge that GreenFi sets out to address. So, before jumping into GreenFi, I'm just going to touch on eco-credit. Eco-credit is basically when loans take on environmental conditions, be it planting trees, using climate-smart agriculture, or responsible fishing mechanisms. Sustainably managed resources are rewarded by more attractive credit scores and also lower interest rates. This has been developed in the kind of formal financial sector. However, it's now kind of gone global. But 80% of small-scale producers lack access to this kind of formal finance simply because their credit demands are so small and their physical distance from banks mean they're inaccessible. So that's where community eco-credit comes along. And this is where a community manages a revolving credit facility that is loaned out to borrowers who have proven their engagement in a resource protection plan. They can do so flexibly and without crippling interest rates, and often rely on peer pressure, social bonds to ensure the repayments. But in order for these community credit models to work, they also require monitoring tools for the environment, loan tracking tools, and training so that communities can actually carry out these funds. And that's where GreenFi really comes along. We provide a mobile application, the old version is sitting up there, for the communities to track their loan applications, loan repayments, as well as their environmental monitoring. We also have training materials for NGOs and companies that can then assist communities in setting up these funds. And finally, an award-winning eco-credit scoring system so that communities and individuals can go to formal financial service providers and prove that they've engaged sustainably in these kinds of funds and are less of a risk for default. So at the moment, these kinds of funds are largely funded by CSR or philanthropic means, but we're also looking into non-traditional environmental funding, be it from the blockchain sphere and carbon markets as well. So really what we are doing is providing a scalable back end to this community eco-credit movement. Okay, so the money, yeah, right. So our investment proposition and why we're here today, we're looking for $500,000, sounds like a lot, but we're going to do some exciting things. We're going to develop and upgrade our system to comply with international fintech standards. We're going to build in mobile money and insurance for our network of community borrowers. We're looking to really expand our educational facility and have an interactive platform where there's video and virtual reality that community members can use and contribute to as well. So really how the kind of business model works is that we charge our clients, i.e. the NGOs and companies who are looking for those CSR outcomes, for access to our system and for each user who's on the platform. So they cover the costs at this stage. We plan to break even in year 2, and then looking to make a revenue of around 2.5 million 5 years after that. Our on-the-ground impact is 800,000 hectares of restored land, 200,000 hectares of restored reef and fisheries, as well as 1 million previously unbanked people who have access to eco-credit. And these systems are being used across East Africa, this community eco-credit systems across East Africa, with the IUCN, WCS, Mumbai Coastal Community Networks, all using it. Our team is made up of quite an international mix of ecological, environmental, agricultural economists, all with plenty of experience in this space of community finance and climate smart lending. And yeah, we're providing the tools, and we're hopefully empowering communities to do just that, is to manage the resource sustainably. And we're looking for investors who want to be at the coalface of resource management, and are looking for environmental and financial returns. Thank you very much.
Thank you. Ambitious. I have one question. Why did you bring this soil in a plastic cup? You know, seriously.
It's a great question.
And a plastic fish. Kind of strange for me.
For you, okay. Do you want me to answer that question, or
What's that?
do you want me to actually answer the question? No, it was rhetorical.
No, but you ask a question. We'll go quickly through this so we...
Yeah. Well, for me, again, it boils down to what's sort of the business model. Yeah, I mean, you said you would charge per user. So what kind of market sounding results have you come up with? You know, who would you sell this product to? What's some sort of the price that you consider? I mean, there's a lot of mobile software solutions now out there, which are connected to core banking systems, for example, which is, you know, generally quite critical, which I have not seen reflected in here. So how would that, what you're providing, actually connect to some of the, let's say, core banking functionality that a software would have to provide?
Okay, well, just to firstly touch on, I guess, who our clients would be and who they are at the moment. We're working kind of very closely with the IUCN and retrofitting their existing community funds, community eco funds. And how that works is that we charge them a system for our training materials. We charge a kind of flat rate for that, and then we also charge a per user fee. So because it's up to sort of 20,000 people that they have on their big projects, so that's how we raise money. It's $2 for each person who's on the system. And this is kind of in keeping with microfinance providers who are doing mobile platforms as well. So that's kind of done the market research on that. And then your second question is building in the sort of traditional or the existing banking platform. And I think that's, maybe I didn't make that clear, is that because a lot of these people, this will be their first rung on the ladder towards financial inclusion. And it's quite simple. It's almost like a village savings and loans, but with digital records and transparency of who and what's going on. So we can see then, you know, if we're building out, they start off with the community group, they create they've repaid their loans a couple of times, and then they can go to a formal financial institution. So it's starting off, and that's the market we're going for, the 80% of smallholders who don't qualify for kind of commercial loans.
So just to translate this now into my risk language, that basically means you have a confined market, which is the IUCN community bank model?
Well, sorry.
Yeah, no, just to understand whether, you know, in that sense, you're piggybacking on another initiative, so you can only grow or scale as then these initiative
So no, we're
grows,
just
or-
retrofitting with the existing ones, but then we're working with other NGOs to go into different spaces. So in the coastal communities, we're setting up funds with NGOs on the ground there and providing them with the training and support to do just that. So it's not, IUCN is who we've sort of partnered with and continue to partner with, but it's really, we will be working with any NGO, any company who wants to have an environmental outcome and is looking for a behavioral change tool to get communities who are the people who really have the capacity to do the landscape or seascape restoration on the ground.
What is IUCN doing with you? I know them well, but what is the actual agreement with them?
Well, we're working with their East African office to develop this system specifically. I mean, we have an MOU, we are working with them, and they've kind of included us, and they're moving forward in their plans. It's just we're providing this tool. So where they might have a team on the inside who do the monitoring, that doesn't exist. That's what we're doing. We're seeing, they can then see exactly what's happening on the ground through our back end, which, you know, that's what our clients have the opportunity to see how the funds are performing. Yeah.
How do you know the environmental impact?
How
are you, to talk a little bit more about that monitoring, sort of in the...
Okay, so basically it starts community group. They have organized with this on the ground help of the NGO to create a resource management plan. And then they have then set out the kind of the goals, be it to plant trees, to restore an area, to use sustainable fishing gear, the kind of environmental compliance. So, and then it depends. It could be they're taking photographic evidence, uploading it onto the app. It's verified either by the NGO or by the community group. Or else they are keeping digital records locally of participating in a group activity. Maybe you're grazing your animals away from the source of clean water, different things like this. And then, so then there's also just peer-to-peer. I saw Johnny, he was very good now, he didn't bring his cattle in last night and everything's clean. And, you know, those kind of peer-to-peer, NGO, and then photo evidence. That's how they know what's going on. And then that's all kind of programmed so that as the project manager or as the NGO, you can go in and see in sort of the data files of what's actually going on the ground.
So the people, and so forgive me, so I don't have as much of the sector context here for this, but so these are people administering development programs.
Yeah.
Right, who are looking for a more efficient, you know, cost-effective and user-friendly way to, you know, upfront engage, you know, the people they're impacting, and then ongoing monitoring. Is that a fair general
I think so,
description?
Yeah. So we have the know-how. We have, between our team, we have almost 40 years of experience in this kind of in this space, and so we have developed our model, you know, learning from different existing things, and then provide, yes, the monitoring as well as the training. Yeah.
So the two disconnects for me are kind of, I was really excited in the eco-credit movement. It's like, that's a cool, catchy term. But you talk about kind of, you know, reaching those that are far outside the access to capital, access to credit. And so the first place I went to when I read your profile was, is this an interesting new tool for an MFI, right, to make their business model more efficient?
Yeah.
But it sounds like it's really more focused on NGOs.
Yes.
And so that's just a little confusing to the sort of, you know, the audience of just hearing the pitch. Is kind of just clarifying sort of who your audience is.
Yeah.
Because I don't know if there's a financial credit transaction element to this mobile app, right? Or if it's just information gathering, you know, crowdsourcing that sort of through the app for monitoring purposes to understand the environmental impact and or compliance, potential compliance. I would kind of go down the like, what's the risk that that's actually valid data? and or kind of skewed by whoever's participating in it. But so it's very different framing, right? Of this is providing access to capital, access to credit to sort of get people to, through a financing solution to behave in a more environmentally friendly way, to sort of, making a development NGO kind of intervention, more efficient. Both good.
Yeah. So I guess that's probably how we came to be doing what we're doing. My co-founders, they set up F3 Life, which does just that. It provides support and services for microfinance and for banks to incorporate the climate risk into their portfolio. Yeah. And that's what they do. But in the process, when we were going through the people that we were providing this service for, there's 80% of people who are the smallholder farmers who don't qualify for microfinance loans. They don't, because the amount of money is so small, as I mentioned earlier. So that's why we kind of got sucked down that rabbit hole of seeing who are all these other people, how can we, obviously we'd have a sustainable model and we can just provide credit for them, but unfortunately at the moment the answers aren't out there. We don't know how, we're on the way to discovering hopefully how we can actually make it a sustainable model. But for now it does rely on NGO boots on the ground and their support, and then also donors from private sources. Yeah.
I think it was in your written piece and not necessarily in the presentation, but there was some sort of suggestion that there's kind of a reporting to almost a credit bureau that sort of, am I remembering that right?
Was the little diagram? No.
Maybe. Anyway, maybe not.
No, but we do.
But the idea is you're establishing a bit of a credit
It's
history,
a credit,
even though you're not really, there isn't a loan, there isn't a microfinance transaction involved.
No, it is. So the communities borrow from this fund. They repay into the fund.
Got it.
The next person repays, borrows and repays.
So it's potentially transferable from the NGO context to an existing MFI context.
I mean, in theory it is. A lot of the MFIs don't require the sort of community, the community setting, whereas this sort of depends on that for it to work and to work to scale. But then once people have sort of set up this their existing eco credit score, then they can go to MFIs.
Eco credit score, there it is.
Yeah.
But just to understand, I mean, that means that you have tailor-made solutions, I mean, for each and every NGO.
Yep.
And what I also hear between the lines is that, you do a lot of training and counseling. So, I mean, if you factor in all these costs for tailor-made and counseling and so on, I mean, what would be then the minimum number of clients actually in order to break even for that specific NGO operation, for example?
Well, it's more the training materials that we provide. So we provide an amount of support that really we train project managers. They collect the data, and then we communicate with the NGOs, is this a viable project for the community that you hope to work with? And then they move forward. So our overheads are really limited to simply the training materials and then the running costs of the platform, of the app and the back end. So as for the minimal client base, I can discuss with my co-founder. I don't think I'm going to do an accurate guesstimation now. Apologies.
That's the end of this session. There's nobody else, right? So I do appreciate seeing all these, what would you call them, presentations, pitches, and I defer to my colleague here from the African Union for you guys to really meet him, because African Union is sitting here watching your except for Indonesia, and I think that it's heartfelt to see the presentations. But again, from a business return on investment, we're here to tear you apart.
Thank you.
Not tear you apart.
No, hopefully not. All right, thank you. Thank you, Jules. All right, so we have a couple minutes left, and we'd love to get some feedback from you, some closing remarks, if you can keep it brief but sweet. before we move into our last section. So yeah, if you can share any remarks or insights.
Yeah, tearing you apart. I mean, I think that was a reference to me, David, right? I'm coming in from
So sweet, really.
No, I mean, I have
Underneath
to
that exterior.
live up to the expectations. I'm German, so everyone expects Prussian diligence, tightness and to the point and so on. So I hope I delivered that. Then on top of that, I'm taught of risk management, so I have to ask all these nasty questions. So sorry for that. No, but I think it was very refreshing to see, all this, commitment and innovation and a lot of, really interesting ideas. Very diverse. I think, from fund solutions to setting up a new company to tech solutions, which I think are really interesting to see, because fintech is some sort of the buzzword of the decade, I should probably say, of the century. So everyone is looking into this, and so it's very interesting to see that this is also now picking up here a very interesting momentum. At the same time, I think, and this is what I would like to echo from what David just said, is that not probably every project is in that sense already ready for direct investment. And also, it's not just a question of investment, yes or no, but also what type of investment. What are we actually talking about? Are we talking about VC, Series A transactions? Are we talking about growth capital? Are we talking about debt? Are we talking about equity? Are we talking about soft loans? We heard a lot combination, which from our own experience, I have to say, is not that easy to basically combine for various reasons. So I think there it is very important to be very clear-cut on which part requires what kind of specific financial instrument, and how do you manage the different stakeholders that come with these different pots of money. So that would probably be my overall, let's say, reaction. And then certainly, it's always about markets. Who picks up that product? Where do you sell to? Who is your client base, and how reliable is that? And are you basically working on the basis of one specific model, and how crisis resilient is that? If, say, the social forestry program falls apart, what would this do to your business proposition? So I think these are probably just some additional elements that I would like to convey, but great job done. I have to say, and you stood the test here, and sorry for being here and there a little bit nasty.
So that was a great recap. I also congratulations. This is hard to do, I know. I guess just in even the most simple terms, whatever type of capital, and it's important to understand and be able to articulate. We're looking for very patient equity. Capital, someone who's looking to own and shares in a fund that's going to own an asset for a decade and a half, right? Or we're looking for seed, startup, kind of believe in our vision sort of capital. But I think all capital wants a really clear understanding of what you're going to use it for. How are they going to get it back? What's the risk that they don't get it back? And how are you mitigating those risks, right? That's the just fundamental, right? Like the nuances vary across different types, but fundamentally, for me, those are the kind of questions and answers I try to unpack a little bit. And if it's not entirely clear, right? If it's, I've got a great business, here are the fundamentals of my business proposition here are my projections, here's why you should believe in them, right? Or it's, I've got a great kind of investment strategy in this particular asset class. It's just a different frame, but I would always kind of think about, are you answering those fundamentals? Are you walking your audience through that?
I do second that, and I appreciate that coming from a investment bank, if you will, or investment banker or fund managers. At the same time, as an entrepreneur, I see the four eager and ambitious and people who are on their game, I see that the only thing I can comment is that what you just said, which I didn't hear exactly what you want because you're still modeling that. Are you an NGO? Are you a for-profit company? So it's a little difficult to imagine where you're going unless we see more. But that's the only comment I have. I think each one of the presentations was very good. And on the other hand, next time or whatever, to come in with more of a, this is exactly what we want. Or this is exactly the structure of the company. You know, that kind of thing. Okay. So I conclude by saying bravo, and we acknowledge that, and especially for GLF, because they've hosted this and given the opportunity to make this happen.
All right, thank you. Thanks again to our pitchers and to our lovely dragons. So don't go too far because we have the final event, organized event of the evening. There is a reception, but we have the closing plenary, so it will happen in here. So don't go too far. It will happen very soon at 5:15.
Welcome back. That was our Dragons Den. Please let us know what